Everyone's talking about the big players in the resources sector, but the truth is the real opportunities are often hidden in plain sight. Right now, there are a handful of ASX resource stocks flying under the radar, and they could be about to take off. For decades, we've been guiding investors through market cycles and insights trusted by outlets like Bloomberg, CNBC, Sky News, and more. And as a licensed financial services provider and an accredited training organisation, we've built a reputation for not just analysing the market, but also educating the next wave of traders and investors. In this week's show, we're revealing 8 resource stocks most of the market is overlooking, but they could be set to be a serious upside potential. I'm Dale Gillham, joined by Senior Analyst Janine Cox from Wealth Within and Analyst Pedro Banales. Good evening.
Good evening.
How are you?
Fantastic. And yourself? It looks like it's just you and me, unless Phil's hiding somewhere.
Well, I was about to say, this is like old times. How many years did we do it on our own?
I know, it's been a while. I think we're going to have a lot of fun tonight.
I know, but you're a long way away over there.
Not too far. I can always lean over.
And Pedro's a long way away too. How are you doing, Pedro?
How are you guys? Yeah, sorry, Phil's jumped on the plane and he's come to join me.
Well, let's get straight into it. The resources sector is firing on all cylinders, driving the ASX higher, and the momentum looks set to continue as global demand for critical minerals keeps growing. Now, while the big names are grabbing the headlines, it's the hidden gems flying under the radar that could deliver the biggest gains. Now, Janine, which types of stocks in this sector should investors be keeping an eye on for right now?
Look, I think that there are so many, and that's the thing. But I'd say some of the lithium stocks, I'd say some of the uranium, and I don't know if I can say that.
You can.
Right?
It's okay. It's not a 4-letter word.
But I'd also look at stocks like gold, you know, in the gold space.
Yep.
There's a lot of companies that are finding new
What about silver and palladium?
New discoveries. Silver is definitely one at the moment, but you know, you'd have to check the individual stock because some of them are quite on the low liquidity side of it. So they're the ones that I think are probably the better ones at the moment.
Yeah, I know we did a show a few weeks back on gold and some of the other metals as well. So if you haven't seen that one, check that out. But all right, let's get into our first lot of stocks. Now, Janine, you want to bring up the first one?
Oh yes, look, this is WA1 Resources, and I've got the monthly chart up here, and to me, as a chartist, I'm looking at this pattern, and this is just a work of art. And, you know, I hope the CEO's listening because it does look like a work of art. It looks beautiful, a nice pullback that we've seen here on the chart. It's probably, when you look at it, it's fallen probably a little bit more than 50%, I'd say, and then it's taken off and trading under around the $20 mark, but this could be a nice little setup for much further rises to come. You know, ideally after having 1, 2, 3, 4 months up, I'd like to see a little bit of a pullback or at least consolidation before it gets going. But longer term, this looks really good, doesn't it? Textbook, that's a good way of putting it. But going to the weekly chart, even so, we can see that that sideways move that I was talking about that I'm waiting to see more of on the monthly is sort of, it's classic pattern, isn't it? It's consolidated right to a point. Normally you don't see such a you know, defined point in that pattern where you've got these highs here, you've got the low there, and it's almost like a flag pattern that's coming into that, you know, a pennant pattern that's coming in there. But a breakout above this high, and we can say that it's on its way. If it falls below that low, then you just wait for the next opportunity.
Well, I'm liking it because obviously the market's been a little bit bearish the last 4 weeks, 5 weeks-ish. We've come off a little bit and it's holding right up. I mean, you know, if you're looking at that for the last 4 or 5 weeks, it's really held up well, hasn't been moving down with the market.
It has, and look, I think I've got the left-handed mouse here because it's just not playing ball for
I can give you the other one if you like.
It just needs a warm-up, I think.
Okay.
But I mean, down to this level here, it's probably a 20% fall from that high, from where the current price is, obviously less than that. But as long as it stays within that sideways range, I think it could look really nice in future.
So you're looking at this for more medium term, short term, longer term?
I would say, given the nature of the stock and the nature of the sector, it's more short to medium term. But, you know, if a breakout from this move, then it's going to come up and test that high. And I think that sort of move is more or less medium term once it gets through that level.
You know what I like about this stock? It's a lower cap stock in that
It
sector.
trends nice, doesn't it?
It is a beautiful trending stock,
Yeah.
and it's volatile without being scary volatile too.
Exactly, yeah.
So I do like that. So how about the next stock?
All right, the next one we've got here is Santana Minerals Limited, SMI. Now, monthly chart on the left, weekly chart on the right. Look at this activity that's happening on it at the moment. It's just gone gangbusters just recently. It's heading towards that $1 mark, not quite there yet. I would say this is probably something that you could look to invest in. Well, if it gets through that dollar mark, this is the real crunch time for this stock. It could be a long-term bull run.
Look, I don't discount that. And I was just looking at the difference between the weekly and the monthly chart and thinking how many people get FOMO off that when they're seeing it. And you could just trade this on the monthly chart and do exceptionally well just on that chart.
Yeah, I mean, look, you could, and even on the monthly chart, like you say, if you use certain strategies that we teach, you can get in just after the lows and then trade them up for 3 or 4 months to get those runs. That's what you're talking about.
Yeah, absolutely. Because I mean, one of the biggest things that we find that traders make mistakes on is FOMO. And we see it all the time with people with emails coming in saying, hey, I've got this stock, where do I get out? And they don't know how to get out. But looking at the monthly chart, it just makes it simpler because you're getting rid of a lot of the noise.
It makes it simpler from the point of view of the entries, but as far as the exits are concerned, given that the history of it and the way that it unfolds to the downside like that at times, and this admittedly was that big pullback that we saw across a lot of stocks at that time, I would say, not to try to trade it on the daily chart. That's what you're talking about, isn't it?
Well, not necessarily. I'm just saying a lot of people look at the market under a microscope, whereas, I've long said if you're in a stairwell, how do you know, if your face is against a step, where do you know where you are in the stairwell?
Yeah.
You could be at the bottom and middle of the top.
Yeah, I mean,
People
the
don't
main
know.
thing that the monthly chart says is there's plenty of upside. That's what it's telling you. Yep.
Correct. That's what I'm saying. Anyway, so what's the next one we've got?
Okay, next one is Lindian Resources, LIN, another one that's had a stellar run, and people look at this and potentially wonder whether the run's over. And after a big rise like that, I'd want to look up the announcements. Is there a takeover or something that's happening that could mean that there's not much more upside to be had? But if it isn't a takeover and there's no other activity other than that the underlying, commodity is booming, that the stocks actually, maybe they've had some sort of discovery. I haven't read the announcements on this one, but this could be the start of another big run that the stock had prior to that. We saw this rise here from May 2022. And it's not to say that these rises can be repeated. And the first high it went up 587%. Off the recent low that we've seen, just to decide if there's enough left in it, we've seen 230%. So to the high, we've still got another roughly 200% to go. And given it's as high as what it is now, I'd say it's probably going to get to at least $35. There's a bit of resistance
35 cents.
35 cents, sorry. Be nice if it was $35. Some of these stocks can.
Well, if you got in at 35 cents, it'd be nice at $35.
Well, maybe we should come back and look at this in 5 years' time and see where it is. But, this could be a nice little one, just to trail a stop loss underneath lows as you're going, though, because this one is more volatile than the other ones that we just looked at.
So what are you saying for people looking at this sort of stock?
It's short term right now, unless it has more of a pullback and a bit more of a consolidation. If you could get a better entry in it after that, I would say it's probably more longer term, but at the moment it's short to medium term.
Look, I mean, at the moment it looks like it's hitting some pretty decent resistance there. And I want to get Pedro's opinion on this because he likes some of these stocks a little bit more as well. So what are you saying, Pedro?
Oh, I'm seeing a beautiful rise there, guys. And I mean, this is a stock that's involved in the rare earth space. So it's got the global tailwinds behind it. It's got that momentum that we're seeing flowing into the rare earth space at the moment. What I like is that it is the biggest volume that it's ever had in the history of its stock. Now, if we go to the weekly chart here, we can see that it's all come into this later part of the chart. And this is what I always say, that this is our advantage as chartists and technical analysts. We can see these types of moves, whereas anybody that doesn't know or is just going by the news, how will they know when these rises are about to happen? And we can see that right here in the volume. The way that we make money when we buy stocks is when we sell them. And really, how do you know when to sell them? I mean, it's just by looking at the chart and knowing these key levels. So, I really like it. I think that the momentum could continue, and I think that we could be testing that 45-cent level pretty soon.
Pretty soon is how long?
I'd say short to the medium term. I think that this has got a great momentum around it. So I'll actually put my hands on the line and say short to medium term. All
right, well, a lot of our viewers are hoping you're right on that one. Now, Janine, what's the next stock?
All right, the next one is now I was just almost licking my lips over this one, but I don't want to go too crazy on that.
Okay, let's look at the stock.
Okay. Alkane Resources, ALK. We did talk about this on the show before, and it has taken off. So kudos to, I don't know if it was Phil or Pedro who came up with this one previously. It may have even been one of our students that put it up on the show.
We'll give Pedro the credit because he's on.
Yeah, well, okay, Pedro, it's yours. At the moment, we're looking at a level above $1, and there was some important resistance around that level. I tell you what, if this stock actually just consolidates above the $1 mark, and then you get another entry after that, I think this could be an incredible, I think we've only just seen the start of it. So if we look at the prior rise that we saw, and we saw a significant run from 2019 to this high here, these are the sort of moves we're talking, 850% from that low. How far has it already gone to date? 200%. There's probably another 50 cents in it, or 40 or 50 cents in it to another significant level before we go to the all-time high. So plenty of upside on this one, but at the moment, just let it consolidate a bit above $1. As I said, I think it'll be a good one.
Because this is a kind of stock, or these last two have been kinds of stocks that people get FOMO with because they wish they'd bought it weeks ago before that huge big rise. So what sort of tips can we give people about these sorts of stock before they enter into them?
Look, it's all about the stop losses. So, if you're going to enter something that's lower on the liquidity scale and it's been rising really strongly, then the best thing you can do is have really good stop losses. And I mean, your book is a classic example of just setting a simple stop loss. But with these stocks, sometimes you may need to give them a little bit more room to move. And just as an example, if we go back to the chart and we look at what's happening on the weekly chart at the moment, we can see that here it's gapped up. And it only fell for a couple of weeks. That's a pretty strong sign. However, from where it currently is now to this low, it's only 15%, which is not a huge amount. If you've got good money management across your portfolio and you have, say 8 to 10 stocks or 8 to 12 stocks across a portfolio, you're not going to be risking much. It's only, depending on your stop loss, 1.5 or 1% of your portfolio.
But people don't look at it like that, do they, though?
No, that's right. They don't look at it like that at all. They're just totally focused on the 440% that I showed on the chart, and that's the focus, and that's where the FOMO is that you're talking about, and people trying to rush in. But then they'll sit there, they'll let it fall, and it might go to 20, 30% on the downside, and they don't even have a stop loss in place with no idea of where they're going to get out. But, you better just sacrifice that small amount, take smaller positions, not looking at the stars and getting starstruck by the money that people who are in it before have already made. That's the FOMO.
Well, yeah, you can't get yesterday's returns. It's already gone.
Yeah, that's right.
Because, I mean, to me, there's two mistakes they make. One is you've just mentioned, they hang on for it as it's falling away for way too long. The second one is they set too tight a stop losses and get stopped out because they're fearful of losing money. So it's getting that in the right place. But anyway, you did mention my book, so now it's time to talk a bit about it. We get a lot of questions either via email or through onto our YouTube channel comments that people saying, where do I start? I've got this much money. How do I get started? This is the book that will help you. Doesn't matter whether you've got $1,000 or $1 million to invest. It'll show you how to get started. It'll help you understand portfolio management, risk, how to buy, how to sell. It gets you everything you need to know to really get started properly in the stock market and getting into being more of an active investor or beginner trader. The book's free. You've just got to pay the shipping. The link is in the description below. Now, that wraps up our first 4 picks. But do not go anywhere. Up next, we've got a stock that's flashing all the right signals and could be gearing up for a huge run. But now time for our trending topic this week. Now, Janine, I know you're talking about this earlier, it's a rip snorter, isn't it?
Well, look, I mean, especially when Trump gets up there on his soapbox, isn't it? Well, the US government shutdown, I mean, what do people think about that? With Trump in power, anything's actually possible. What does this mean for our market? Well, the US government shutdown could be a possible catalyst for a stock market rally. So you'd better stop and take a look. We'll get into the opportunity soon. Now, Carson Investment Research reported that if the US market is higher in September, around 64% of the time, the market will be bullish in October. There's a stat for you, Dale. Although market moved up in September, it's not a foregone conclusion. So where are you likely to find opportunities? That's the thing to look for. Get your microscope out and have a look, because research indicates that certain sectors tend to outperform from US government shutdowns, including consumer discretionary, utilities. We're looking at goods and services that we need regardless of what the government does. Now, we know healthcare has been heavily sold off. Precious metals, all the rage, they're also going to be important and more defensive. So why don't we take a look at the charts to see what they actually reveal about the market and the sector and what's happened in the shutdown. Okay, we'll look at...
All right, so what's the first sector?
Perhaps the best place to go first is to go back to when Trump was in power previously. Now, in 2018, there was a shutdown. Now, it's important what the US market's done, but I think it's more important to understand what our market's done, given that whatever happens in the US, you know, if the US sneezes, then we catch a cold sort of thing happens. But looking at the chart here, you can see that when our market fell down into that low in December 2018, and I remember thinking, this isn't a strong enough pullback for that period of time. It was quite resilient, you know, and I was quite surprised about it because the theory says that often after these shutdowns that the market takes off, as we saw before, not just in October, but beyond that. So I'm looking at a 33% rise that happened prior to COVID. Now, COVID wasn't, you know, not a financial meltdown. It was just an aberration, and it was a market, you know, driven by the big end of town, driving the market down and just seeing what would happen in our market. Now, from that, obviously our market continued to go up after that. But if we swap charts for a minute and we have a look at this line chart, which you'd be saying this is something really interesting.
This is something really interesting.
Our students do know all this stuff. They look at this and they can really easily compare what's happening with sectors. It's just another way of doing it rather than looking at a bar chart. But the top one is the XHJ, which is the healthcare sector. Now, we all know that the healthcare sector has been going sideways for a long time. It hadn't done that since the GFC. We're not in a GFC, but there's been interference in our healthcare system. Since following that pullback in December, which you can see where my cursor is on this low down here, the healthcare sector rose around 80%, okay? So I'm expecting that if our healthcare sector finds a bottom this month and turns back up, or next month, then I'm expecting a 60% rise from healthcare stocks to make a new all-time high in 2026.
Well, there's high probability that we'll find a bottom in the next month or two, isn't it?
Well, that's what the numbers suggest, yeah. So that's healthcare. Now, if we go back to the chart again and have a look at the other indices, we've got the red one, which is information technology. Now, the reason I pulled that one up is because there was a 60% rise after that December low. So we talked about utilities, healthcare, consumer discretionary. I'm going to show you discretionary in a minute. That's the black one. The red one is the information technology. But I'm expecting that there could be, after that, it's holding up so well. I mean, just look at the strength. We could see sort of a 7 to 10% fall from here. But after that, a 25% rise is quite probable for this sector. Consumer discretionary had a 45% increase from the December low. So we saw that happen up to prior to the COVID peak. And we've also seen discretionary go on a bit of a tear, and it's been quite strong. So I'm not expecting the sort of numbers that potentially could be in healthcare to appear in discretionary. But there is one more, and I've got a bit of a drum roll here because I really like this one, and I'm going to bring this one up here. This is the materials sector. Now, materials like healthcare has been sideways for roughly the same amount of time. So if these two areas take off at around about the same time, I wouldn't be surprised. Materials is already making that run now. It's looking good. So this is what we were saying earlier in the show about the metals stocks, the metals related and mining stocks. The materials sector is already showing us that. It rose 40% after the low in December 18. I'm expecting we could see another 30% out of materials if it holds up well.
All right, we'll keep watching. We've got more material stocks shortly. Now, if you do want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back into our topic and get into some more material stocks. Now, Janine, what have you got for us?
Okay, we've got Liontown Resources, Dale, LTR. Now, this looks incredible. We're seeing some huge opportunities off the lows of some of these precious metals, rare earths, some really great moves happening, and you're not too late to the party yet. So we're seeing a consolidation right now underneath, guess what, the dollar mark, so that's exciting in itself. And I'm looking forward to seeing this one break out. There's huge upside. Potentially the $2 is a good target for it, $1.50 and then $2. So, you know, if we just look at the history of this stock and the volatility of it, we can see that it's spent a lot of time over the past couple of years in decline, and now it's got to be the time to shine. So potential percentage return after a breakout from this level, possibly 60% in the short term and then around 100% if it really does get moving. So this would be one that I'd probably have on the close watch list. At the moment, the month for September has been down. So you can see that red bar there. We just need to see it take off above this high here for the more conservative. If you're a bit more aggressive, then you might wait for it to go above the high of September's bar and have a nice close above it.
Another one that looks pretty textbook, doesn't it?
It does look really good, doesn't it? Trend has history of trending well. When it gets near the highs, it starts to give you the real indications that it's getting to a high. So at least it gives you those warning signs. So
I do like it. It looks like it's really setting up for a nice run.
Yeah, it's looking like it could come onto my watch list soon if it jumps that $1 hurdle.
Well, that makes it even more spectacular if it's on your personal watch list. But I'm going to go to Pedro for the next one because I think I'll give you a break so you can have a glass of water and let Pedro handle it. So you can take the next one, mate.
No worries. Yeah, I've got a good one here for you guys. So this one is RSG, Resolute Mining. So they're involved in the gold space, and we've seen gold just keep rocketing up. It doesn't show any signs of stopping. Hence why you can see that this stock is moving at the moment. And it has been moving since the low in 2022. It's made higher highs, higher bases. It's just a beautiful trending stock. Now, even though it looks good on the monthly, I have to zoom out and just show you guys the bigger picture on this one. If we actually zoom out to the start of the stock, I mean, this IPO'd back in 1994 with a price of $24. It's currently trading at $1. Now, it doesn't mean that it's going to make its way back up to that $24 mark, but it's important to note that anyway. I would be looking more at the medium term levels, say a rise all the way up to that $2.30 mark. It's currently trading at $1, so just above $1. That's Janine's threshold. So you can start having a look at this one, Janine, if you like. And I would say that the next resistance level is going to be at around the current level that it's trading at. Oh, actually, maybe just below it. So it's actually just broken above that resistance that I would have highlighted before. So I think it's looking good. We could have a bit of a pullback in the short term. But if we do break above that dollar mark and if we make a move up to that $2.30, that's 140% upside. That is a very nice return. And again, it's one of these kind of textbook style trading stocks. If we go to the weekly chart here, that it just keeps making these type of patterns that you have the breakout and then a bit of a consolidation, the breakout, consolidation. And it's just, if you just couple that with the volume and with everything else, the bar analysis, this one is, it's a good trading stock, I would say.
Well, I was going to say that to you, mate. I think, a lot of people, they buy a stock like this and try and buy and hold it, but as it's shown the last 2 decades, it's very much a cyclical stock, and a cyclical stock will trade between one level and the next, with an elastic band in between. And it looks like if on that monthly chart that we're sort of about halfway between the range from the low to the high of that cyclical range that it's had over 20 years. So you've got to have some really good rules to get into it, but you've also got to have some good rules to where to get out of that, and making sure you're getting in at the safest point, not a high risk point just because it hit a support level, but also getting out of it at a safe point where you know it's going to turn around and start to move down again. But looking really good. Anything you want to say, Janine?
Yeah, I would just say, I think, Pedro, did you say wait for a bit of a pullback? Because you said to put it on my watch list, so I really wanted to clarify that point with you.
Well, if it has a pullback, it'll be under the dollar mark, so it may not fit your threshold at that time. But I can let you know if we do have a retest of this $1 level.
You're so kind.
He's being very diplomatic, isn't he? He's very diplomatic. Well done, mate. All right, well, let's bring up the next one. Janine, you want to take this one?
All right, the next one is Vulcan Energy Resources. So let's take a look. We're seeing a similar sort of scenario. We've seen this huge rise with a lot of these stocks and then a big pullback. We're talking about lithium, we're talking about renewable energy. It's right in the space. It's been really lagging the others for a while. So this one could be a good opportunity. It's come off a really important support level. So if I just put, this is short term, and obviously we would do a full analysis of working out where the strongest levels are for the stock, but right now it's not wanting to play ball with me, so I can't show you. But underneath this line here, June 2023, this low here, so that's about $3.50. I'm just drawing a line simply across there. But what I'm saying is that when you learn technical analysis and you come on board, if you're not with us already, because our students will be seeing this, that some of these levels are important, but there are hidden levels, right? There are really hidden levels that can be traps for you if you don't know how to apply this analysis. So it's so important to be able to understand it, not just simply looking at where to draw a line in the sand where it's had lows and highs before, because there can be lots of new highs and lows on the right-hand side of the chart, which only the hidden levels will reveal to you. So
can I add something to that?
Definitely.
I find a lot of people that I deal with, they talk about support and resistance levels, but there's no real weighting on those. Mm-hmm. They just think, oh, that's a support and resistance level, but they don't know how strong it is and the probability that it will turn the market from down to up or up to down. Whereas that's one of the essential things we teach our students is when is a level that you really need to take notice of, and what's the probability of that, of turning the market, where and it's the same with candlesticks. We see a lot of people going, oh, there's a candlestick reversal. And I go, yeah, I can see 100 of them on the chart. Which one's going to reverse the trend? And it's a combination of things that we teach of price, pattern and time to give us that confluence to say these levels are the strong ones that will turn the market and or the stock. So it's not just about picking levels, is it?
Exactly, that's right. Yep, you nailed it.
And I digress, so you can go back to the chart if you like.
Thank you. All right, so now it's about having a look at what the potential is if this stock really gets going. And it's had a bit of a test. We've seen a bit of a sideways consolidation here, a breakout. I'd like to see a further test, a little bit of a pullback to test that, this first real run out of there. And if it does that, then from here, and I guess this is about using stealth, not thinking, oh, I've just got to pick anything and grab something that's running. Stealth, yeah. And that's what comes from experience. I'm seeing loads more of our students who have been, have come out and they've graduated and they've been out for maybe their first year or two. Now they're using stealth rather than thinking that they've got to get, moving targets, which is what a lot of the guys tend to do. No, not being sexist or anything, but people. I can say it, can't I? Got to be real. And look, that's what tends to happen. They'll tend to want to trade too often. But now I'm seeing real maturity in some of these guys and thinking, well, I don't have to trade a lot. I just have to trade well, which is what you've always said.
So what you're saying is that before people come to us, they're trying to find anything that's moving and try and get in on those. Whereas what you're saying now is our graduates are narrowing down their focus, being patient and waiting for the best opportunities.
Yes.
And using stealth in that because it's being laser focused, which cuts down their time of analysis. It increases their win-loss ratio, their profit-loss ratio.
That's right.
Et cetera, and reduces their risk dramatically as well.
That's true. That's so true.
All right, have you finished on
Many a wise
VUL?
words there. Look, other than to say, if we just look at the upside potential, I think, there's once we see this consolidation, 50%, and look to the all-time high, there's 192%. So there's plenty of room in this one.
Okay. Now I know Pedro, the next one, Pedro's been, getting excited about talking about this one. He talked to me before we came on air. So are you ready for this one, mates? Bring it home.
I think this is a pick of the bunch, guys, and I'm glad that I'm the one covering it. That's Iluka Resources, ILU. I think that this one is looking absolutely beautiful. It's got a larger market cap than the other ones, and it's exceeding the price levels time and time again. It's just making higher bases, higher highs. It is getting to that level here, that all-time critical. I'd say anywhere between that $7. To that maybe $8 as well. I think that's going to be the band to watch out for, but that $8 seems to be the more critical level. But it goes back to what you guys were saying. It's knowing I would say the strength of those levels. And when our students get to module 4, they get really humbled. If you think that resistance and support levels, that module right there will humble you real quick because there's so much more to learn than just simply support and resistance. But I mean, we can just ascertain that in the past has provided support and resistance. So to that upside, I would say that there's around 25%. But if it does get through it, I mean, this stock can would probably retest that all-time high, 53%. That's 70% all up in a nice structured way. And it's done that before. We can have a look at the monthly chart here. It is quite cyclical. And we can see that every time that it does break a new all-time high, it exceeds it by around that 100%. And back here, it exceeded it by around only 22%. But still, if it does break above it and we have a price target of anywhere between that $14, say $15 to that 23%, that represents a huge 140% upside on this. And really the trading rules around this, I think you could keep them quite simple. And you could even just trade this on the monthly chart. You don't need to be looking at this stock every day. And this is another misconception that I see all the time. People think that you need to be looking at a chart and all these ticker symbols and things every day. Just keep it really simple and you can make a lot just by trading these types of stocks.
Wise words from our friend overseas, isn't it?
I know, he's so young but so wise. Why is that?
It's nice when the kids grow up, isn't it?
Standing on the shoulders of giants.
No, I remember when Pedro first came to us, he'd been trading like he was talking about what you shouldn't be doing. And he was one of those people that I mentored back in 2018, I think it was, or maybe probably 18. So, and if you think Pedro's impressive now, he's come a long, long way since the first time I spoke to him and started mentoring him. So well done, mate, for the journey you've taken. But moving on, have we got any more stocks? We got one more? Or we've done?
I think we're done.
All right, well, we're done. Well, moving on shortly, we're going to have an ASX defence stocks. That could be the next big 10 bagger, following on the footsteps of Drone Shield and EOS. Now, you don't want to miss this one. But first, let's answer your questions. Now, Burgess writes, question regarding CHN. He says it gave a strong breakout on weekly charts. Looks like the bottom is in already after strong support around $1.08. Breakout from a long accumulation pattern. Now, I hope Janine remembers when we had a chat about 2 weeks ago. Target around $3.80. I bought on breakout and a stop loss as 20%. It's a volatile stock, so I think he said a stop loss at 20% because it's volatile. I still have in mind that a monthly pullback could happen. Your thoughts? So I'm going to go to you because he's put your name in it. So do you remember chatting to Brajesh?
Yeah, Brajesh, we love you. You're one of our favourite students. So thank you so much for writing into the show. great stock, great question, and I just love where you've bought, just the discipline of waiting for that opportunity. I mean, you know, there would have been, if we look at the chart, there would have been people trying to buy in around all these levels all through this sideways move and get absolutely killed as it then came back and then pulled back. But now you waited for the confirmation of that bottom, you see the right activity happening here, and then the breakout happens. So, you know, this is a nice, simple trade. It's all about buying at the right time, but it is about the closing as well and being able to manage that trade through. Because we used to say to people, you know, there's three processes here. There's the original purchase and,
Correct.
you know, choosing the entry, and then there's the management of that trade during the trade,
Yep.
you know, and then there's the final close at the end. But people often don't think about it that way. They're just so focused on the buying.
Well, that's what you said earlier. People are focused on, you know, the 100, 200, 300%. They forget about risk and they forget about managing the trade. And
look at this stock.
How to exit.
I mean, it's a classic, isn't it? This our advanced students will be seeing this and seeing the pattern that's unfolded here and the basing pattern that's occurred and then the break. I mean, it's just a beautiful one.
So he hasn't really answered the question other than our thoughts because he's in the stock.
I just
great
thought I
entry.
would give him ticks for all of the
Tick,
things
tick,
that he's
tick,
doing.
good
Yeah.
entry and everything else. What about his stop loss, 20%? Do you think that's okay?
Look, I think for smaller stocks it's okay as long as you've actually worked out the theory behind it, and he would have done his back testing anyway and had a look at what that means.
So you're confident?
I'm confident in what he's doing.
Mate, you've got 2 thumbs up, Rajesh. Well done. If you got Janine confident in what you're doing, you're on a winner there anyway. But let's move on. Simon's email is next. He said, "Hi guys, thanks for the tip on Drone Shield. Had it on my watch list waiting for a pullback on a strong trend. Entered on the 24th of September this year. Would be great to see some charts on lower timeframes daily."
He wants to look at the daily chart.
I don't know why.
I've got the daily chart up.
Yeah. But why?
Well, he's probably trying to tell us where he's purchased, because if I change this back to weekly, you know, it may not be as clear perhaps, but I can still see an entry there even on the weekly. So there is no real need, is there?
Well, that's the thing is, I mean, and we see this all the time. I mean, brokers show you all the daily charts because they want you to trade more and get emotional. So you understand why when you open platforms it's all daily, but you know, daily charts are next to useless to you as a trader. They really are, unless you're trading high leverage, very short time frames like daily, you know, in and out in the same day, that sort of stuff. Then daily charts are a little bit more important, but the most important charts are your monthly and your weekly.
Weekly is going to be so important because it's about understanding when the stock's going to want to come back to the trend, the angle of the trend. But I think the daily could be useful as well, because if we go back and we look at how Drone Shield unfolded when it made this high, it didn't really give a good opportunity on the weekly chart to get out at a good level.
Let me ask you a question. Have you ever bought off a daily chart?
No.
Neither have I.
It's a weekly chart
So what
or
is
monthly
that?
chart.
So, but I'm not saying is why.
Why do you want to look at the daily?
Why do you want to look at the daily?
You can look at it to manage the stock.
But that's what I'm saying.
As it's unfolding.
So if I'm trading options or I'm trading CFDs or something short-term high leverage, I'm maybe doing an exit on my daily chart to preserve capital and leverage.
Look, I think I think we're getting through to a lot more people. I think more people are taking the weekly chart.
Can I go to Pedro and ask his thoughts?
Yeah, I think
hey mate, because I know you used to look at daily charts before you came to us as well. So I want to get your thoughts on this while we're talking on it.
Yeah, sure. And I think that the best way to articulate this is on my chart. So if we go to it, I wanted to show Simon something. So just say you bought over here on the weekly chart, right? Is there any reason to be out of this stock throughout this whole period? And I would say, no, there isn't. And currently you would still be in this stock. So you would have been up, say around that 213%. Now let's switch that to the daily chart. And now look what starts to happen, right? You have all of these little down moves and gapping and all of these other things. You've got this down bar here on the 30th of June that would have had you second guessing yourself. And that's what happens. When you look at the daily chart, you start to look at all these little fluctuations and you start second guessing your trade. So the best way to do this is just to iron out all of these little fluctuations and just stick with it. And you're going to make a whole lot more profit than if you're looking at the daily or even if you go into that lower, hourly time frame.
Can I tell you a little story? A few years back, I had a guy on the phone. He was hit and miss with his trading, been trading for like 7 or 8 years. And he was chatting to me, and I asked him how he traded, and he told me his trading techniques. And I said, okay, what time frame are you on? And he said, daily. And I said, all right, so what I suggest you do is just go weekly and monthly. Do that. And about 2 or 3 weeks later, he rings me up and he goes, I did what you said and I would have been super profitable had I just got off daily and just did weekly and monthly like you suggested. And then I said to him, and I gave you that advice for free. Imagine what I can do when you pay me. But it was like that because he was like everybody else thinking daily charts is where you make the most money. No, you don't. You make the most money on the monthly chart and the weekly chart because you're not getting that
I've heard that so
emotional volatility that Pedro was exactly talking about. But anyway, let's move on to our next email. It says, hi team, CBA on the weekly chart has been going down for 3 months. Sellers in control. Crystal ball gazing, there is resistance at $160. Would you think it may come back to here then rally, or will it test $140? Its major competitor NAB is going gangbusters after sleeping for a long period. Will the sleeping giant awaken? Now, Janine said a while back that it had the potential to hit 200. Many thanks. Great show. Now, I know a few weeks ago we said NAB was one of the better out of the pick of all the banks.
Yep.
NAB was our pick. And I think we also said Westpac. Correct me if I'm wrong.
ANZ was the underdog.
ANZ was the underdog.
Yep.
And no new entries into CBA. That's what we were saying back then.
Correct.
What do you think now?
Well, there's still no new entries, but I can only imagine that someone's asking that question because they may still be holding it.
Correct.
And it's pulling back, and it has come back quite a way, but it's not concerning at this point, given that the angle of the trend, if you look at that on the monthly chart, it's still intact. So if the intention of going in, it all depends on the intention. Like if the intention of the trade was to go into this more medium term or medium to long term, then you wouldn't even be worried about it at all. And I remember this just brings back what we saw before the GFC. I mean, you and I, we were watching stocks unfold. We were seeing stocks go below trend lines on the monthly chart. We knew that something was happening. We didn't have to read it in the papers or look at it on the news reels. We just could see it on the chart. And so I think that Commonwealth Bank is going to be a really good one for people to watch. The danger zone will be told by the trend line.
Well, because I mean, if the market's going to be bullish like we expect, financials will still go up, but it may not shoot the lights out.
Financials will go up on the back of the mining stocks.
Correct.
If they keep going.
Now, he's talked about resistance at 160, but it's above 160, so I'm not sure why he's talking about it. Or maybe he meant support.
Resistance on the way up, perhaps, you know.
I don't know.
And support at 140, but it could come back into that zone, as I've shown from the angle of that trend that's there.
But that depends on your time frame for the trade. If you're short term, that's interesting, but if you're more medium to longer term, is it that interesting for you, or should you be worried about it?
Well, if you were shorter to medium term, there's already some rules that we teach even in our trading mentor course that they could have used to manage the exit on that, and that would have kept it really tight to that all-time high. But if they're more medium term or medium to long term, there's nothing to be concerned about at this stage. You've just got to make sure you've got your stop loss in place and you've got your trend line. So
you're liking CBA still?
I still think that there's further upside in CBA. We just need to see that pullback unfold and finish. Yeah.
Okay, Pedro, like CBA still?
Not at the moment. It is falling, so I wouldn't be looking to enter, and there's nothing really to tell me that it's going to turn anytime soon. But I do agree with Janine that it is still within that longer term uptrend. So right now, if you're not in it, I'd be watching it, make sure that it does bounce. I think that I would expect a bounce off that $160 level. So that's what Sean may have meant, that there may be some support. I do agree that there may be some support. And it does look like there's some support at 140. So, yep, it's just a watch for me. But if it does show signs of an improvement, I mean, especially if we get an RBA cut and more loans start to come out, I mean, they own 50% of the loans in Australia, basically. So, they're going to fare very well, especially now that in October, where the 5% scheme has come out from the government for the first home buyers. So that might provide a tailwind. All right, Pedro, I'm going to stay with you because now's time for our hot stock of the week. And I know you've got a good one for us this week. So take it away, mate. Oh yeah, this one's a good one. So this is Veeam Limited, ticker code VEE. Now this is a company that's involved in the defence space. much like Drone Shield and EOS. They manufacture submarine parts, actually. It's all the propulsion and stabilization systems, which are going to be in high demand. Now, the latest announcement is that they've completed a $14 million placement to accelerate growth in defense. So they're doubling down on defense. On top of that, they've signed a new $33 million agreement with a manufacturing company to provide them with all of their technology. So that's huge. And of course, the stock is up in a matter of 22% today. So if we go to the chart, we can have a look whether there's still opportunities in this space. And I have to say, we did cover this stock a couple of weeks back with Phil when it was trading at around that $1.30 mark. So, if you do watch our Monday shows, it is beneficial because the stock is up in a matter of, almost 50% since we talked about it. So definitely something to look into. But basically, it has traded above that down momentum, and it's clearly in a new uptrend. You can see by the volume that's coming into it, huge volume on this up move. Still on continued volume there. There is an entry there that I can see on the weekly chart. So you could have used an entry, just even from the Trading Mentor course on this, and you would have been up, and I'll just put the percentage tool around here, you would have been up around that 83% on that entry rule that I'm thinking of there. So, there's a lot of reasons to be in this stock at the moment. Whether it's an opportunity right now, maybe you might want to wait to see what happens when it reaches that $1.90 to $2 level. It might have a bit of a pullback. It might come back to refill this gap. So it might do something along the lines of this and then trade back up above it. And what happens usually when it does break above the all-time highs, what it did last time anyway, it traded up around that 40%. So, if we put a level of around that 30% from the all-time high, it's around that $2.50 that we could assume that it may go into. But I think that it is in one of these runs that we're seeing here. It's in the same type of momentum as well. We've got that gradient of rise, which is around that 49%. And then we've got a steeper rise here of around, if I can get my cursor to work, it's around that 65%, and now it's going a little bit more vertical. So that's just why I'd say maybe right now there's a little bit of heat in it. You might want to wait to see if the heat dies down, but I think that this one has the potential to double in price, much like we saw with that Drone Shield and electro-optic systems.
Well, that sounds exciting, mate. I know what you're talking about. Obviously, it's angles, because it's momentum and volatility that we talk about all the time, as well as having price rising over a certain period of time on certain angles. So you were saying, 45%, 60-odd%, and what it's doing now. So it is, to bring it down into layman's terms, the stock is running faster, or is running up more in price over a shorter time period than what it has done in the last two runs that you showed us there. So it's about making sure you're on the ball and, making sure you've got good entries, because I'm with you, it could actually fill that gap before it takes off again. But that's giving everybody time to do what Janine was talking about, being stealthy. And this is the difference between people that trade on emotions, thinking about doubling their money and looking at what yesterday's returns were, rather than people that we teach that are stealthy and waiting for the right time to enter. Have you got any words you want to say?
How many opportunities did we give on Drone Shield? There must have been 2 or 3 at least.
Yeah, a few.
Where we've talked about that. So it continued to come back. So there's no need to have FOMO in this case.
No, you've got plenty of time to set yourself up, and that's exactly what Pedro's talking about. It's exactly what Janine's talking about. If you've got a good set of rules, a good strategy, because I know we do get a lot of people asking, as I said, on emails, etc. So, if I've got what's a strategy for me to turn 10,000 into 100,000, And at the end of the day, the good strategy is to learn what you're doing. And making sure you understand why you're buying, why you're selling. You've got a good trading strategy and a good plan there. Any other words of wisdom before we move on?
Pedro, I think you've outdone Phil on this one.
Oh, look at that.
Oh, let's see what happens. I mean, we're up 1-1. Yeah, he's picked Drone Shield. I've picked EOS. So let's see what happens with this one.
I actually want to hear people's comments on that. Do they think that this one could outdo Drone Shield?
Well, I'd like to hear that, but get them to say why, because often we get comments of people going ABC stock or whatever, but no reason why we should look at it, or go look at the, and you go, but why? Do you own it? Do you not own it? Why do you put it on? Why are you putting it on our comments? Why do you think it's going up or down, or why is it interesting, or why isn't it interesting? So get down into the comment section below and tell us where you think this is a better buy than a Drone Shield and where it's going to go to. So try your education and knowledge and some of your analysis on it. But anyway, if you want more from us, check out our video, Buy the September Dip, 8 ASX stocks to buy.